Over the weekend, some major policy changes were announced that could reshape how tech stocks and Bitcoin move this week. In today's video, we'll break it all down, starting with Trump's latest tariff exemptions, what it means for stocks like Apple and Nvidia, and why it might just give Bitcoin a short-term tailwind. Plus, there's a big move from Ethereum you should know about, some whale activity heating up in Bitcoin, and of course, we'll wrap up with my key price levels to watch as the markets open. So if you're new here, welcome, and if you're returning, welcome back. I'm Annie, and this is 𝗟𝗿𝗃𝗃. Be sure to hit that like and subscribe button if you haven't already so that you can be notified every time I drop a new video. Now, let's get into it. So first up, the biggest weekend headline, of course, was Trump. He has officially exempted smartphones, computers, and other major tech hardware from the new reciprocal tariffs. This is a huge temporary reprieve for companies like Apple and Nvidia, Broadcom, Tesla, Intel, and AMD. The tariff exemptions are seen as an olive branch, perhaps a strategic move to protect US tech giants that heavily rely on Chinese manufacturing. Now, what this means is that companies that were bracing for added costs, slowed production, or disrupted supply chains just got some breathing room. Apple and Nvidia, two of the most China-exposed tech names, are likely to react strongly when the market opens. But why does this matter for us as traders? Well, Bitcoin is often viewed as a tech-correlated asset, especially in times of macro uncertainty. Therefore, if investors rotate back into tech stocks with confidence, that risk-on appetite could bleed into crypto short term. So don't be surprised if Bitcoin gets a sentiment boost early this week. Now let's zoom out for a second and take a look at this chart from the US International Trade Commission. It shows just how dependent the US is on China for things like smartphones, PC monitors, and lithium batteries. Here you can see that 73% of all smartphones imported to the US come from China. It's 86% for game consoles and 79% for monitors. So when we talk about de-risking or reducing exposure to China, it's not that easy. The supply chain is deeply intertwined. And that's why exemptions like the one we saw this weekend are so critical. They're not just policy headlines, they directly impact market sentiment, supply chains, and even inflation expectations. Now, if these exemptions hold and aren't just a temporary bluff, some companies that will benefit most are tech companies like Apple, Nvidia, Broadcom, Tesla, Intel, and more. So watch these tickers as the US market opens this week. Some of them were already pricing in strength from last week, so we may see a continuation gap. Now let's talk about crypto sentiment because it shifted bullish over the weekend. Bitcoin continued its slow grind upwards and a lot of altcoins actually started bouncing back as well. But here's your reminder, weekend price action is not always to be trusted. Monday can often reverse whatever the weekend does. And right now, Bitcoin dominance is still rising, meaning Bitcoin is still outperforming most altcoins. So if you're looking for altcoin breakouts, you want to watch for a drop in Bitcoin dominance. Until that happens, this is still a Bitcoin-led market. Now, quick shout out to today's video sponsor, Bitunix Exchange. This is a non-KYC crypto exchange where you don't need a VPN and it's super easy to use for traders who want privacy and speed. Even better, with the link in the description of this video, you'll get a 20% trading fee rebate of all of your futures trades for life. That's exclusive to our community. So if you're looking to try a new platform, give Bitunix a go. All right, now let's talk about Ethereum because Ethereum had a strong bounce recently and it's caught a lot of traders' attention. There's a great article here from News BTC explaining that Ethereum is still trading below its realized price. For context, realized price is the average price at which all ETH was last moved. So when ETH trades below it, it historically signals a rare buying opportunity. And this only happens once per cycle. And when it has in the past, it's been near major bottoms. So right now, ETH is trying to reclaim key levels. And if it can get back above its realized price and hold, that could trigger more confidence and rotation into the altcoin space overall. So ETH is definitely one that we're going to want to watch closely this week, as it's often a leading signal for risk appetite in crypto. So when we have a look at the ETH chart, it still doesn't look fantastic. And before I get to ETH USDT, I just want to quickly take a look at ETH BTC because this is the one that we want to see change trend if we're to have any hope in our altcoins overall. And so when we look at ETH BTC here, look, when you zoom out, it's just terrifying. This is the ETH BTC chart on the weekly time frame, and it's really just been in a downtrend since the end of 2021. 2021, and it really does look quite atrocious. But we are heading back now to these lows of September 2019. If we can hold here, great. We'll start looking for some trend changes. But right now, this just seems to be straight down and doesn't really look like it wants to change trend at all when you're looking at it on a really high time frame. If we go down to a lower time frame like the 4 hour, it really just looks like it's trying to find support here, but it's still creating lower lows the entire way, and the 50 EMA is still acting as a pretty strong resistance for it. So that could mean that whatever move up we saw recently may be short-lived, and I would not be getting too excited about ETH just yet. So now when we go back and have a look at ETH USDT, again, you can see here it's a pretty strong downtrend, and this one little candle is what everybody got crazily excited about. And again, when we zoom in on the 4 hour time frame, we really still haven't broken structure. So this was an attempt at the 50 EMA. This was an attempt, but we're now back under it. It's critical that ETH creates a higher low in this range now. This was our fast move up that everyone got excited, and then it just got taken right back. So if ETH is going to have any continued move to the upside, we definitely don't want to see it come into this blue vector zone on the 4 hour time frame. We want price to stay clear of that and then create a higher low, and then you might get a little bit more bullish on it, but still you'd only be bullish back to this previous high at about 1670. In order for us to change trend, we've got to initially break that level, and then the next level to break is going to be up here at 1915. If we can get all the way back up there, that will also break the 200 EMA, which will be good, but it's got a lot of work to do before there's even a chance of any of that happening. So what you're going to be looking for on ETH as the market opens is to see if the higher time frame does give us a higher low. It might be part of the false move that opens the week, it might be following it, but either way, we don't want to see it come too far into this area of interest if you're wanting to be bullish on ETH. All right, let's move on to something that I really want to draw your attention to, and that is the Bitcoin whale inflows. So according to a new report from the Coin Republic, we just saw the largest spike in whale inflows since February. Now that's not a small deal, because when the big whales move large amounts of Bitcoin onto exchanges, it almost always precedes major volatility. Now it doesn't necessarily mean we're going to pump or dump immediately, but it does mean that something is brewing. And these kinds of moves, they often happen just before large players reposition or hedge, especially ahead of new macro data, regulatory announcements, or major market opens. So don't sleep on this. If you've been waiting for confirmation that something big is coming, this right here is definitely your early warning sign. And if this kind of information is new to you, or you're not quite sure what to do with it, this is exactly why I built Trade, Travel, Chill. Whether you're a beginner still trying to figure out how to get consistent, or a more advanced trader who wants to refine your system, we've got a membership that fits your goals. At TTC, we run 3 live sessions per day covering all the major markets from Asia to the US Open, and you can get your daily market updates, access to our custom trading indicators that you see me use on this channel, and the same systems that helped hundreds of traders go from confused to confident. There are 2 membership levels to choose from, the first one being business class, and this gives you all the essential tools and education that you'll need for self-paced learning. And the second one is first class, and this includes additional direct support from me and the pro traders inside the group. Both memberships come with a 48-hour money-back guarantee, so you got nothing to lose. If you're ready to stop guessing and actually start learning how to navigate the market with strategy, check the link in the description and come join us at Trade, Travel, Chill. We can trade much smarter this cycle. All right, let's go and take a look then at the Bitcoin chart. So starting on the daily time frame, you can see that Bitcoin has been in a downtrend since January, and we did have attempted kind of false breakout here with this wick at the beginning of April, and this week, just as we happened to close, we had another breakout that at this point could also turn out to be fake, because both of those, along with all of these other lower highs that have been created, again, they're all treating the daily time frame 50 EMA as resistance. So if we're to believe that we're going to have any upside, we have got to get at an absolute minimum the price of Bitcoin back above the daily 50 EMA. When we zoom in on the 4 hour, the price action looks pretty positive for a potential start to a trend change, because last week we did have this W formation that formed right inside my key zone, and then we broke the 50 EMA with a high level of volume, which is what we want to do, and we make a run to the 200 EMA again, which is what we want to do. If we're trading this system, that's exactly how the play should go. Following that, we see price retrace or consolidate. So again, it did that. In that retracement or consolidation, we just rely on it to create a higher low if we're to expect further upside. And again, we got that. We got our higher low. Now, here's the problem. After you have the W break and retest, the next level that should start is level 2. So the initial break here that creates the right side of the W formation is considered level 1. And then after your consolidation or retest, we look for level 2. Now, level 2 is retail driven. That is not usually where we see the market makers show up in high volume, unless, of course, it could be a bull trap or a bear trap, depending on which way the trend is going. But generally, this is where retail step in, and the market makers are kind of just meeting at a minimum the other side of the orders. They're trying to test retail sentiment. Now, this all here would count as level 2 rise, and it doesn't scream to me that retail are turning ridiculously bullish, because this is all really quite low volume. If you have a look down here, this volume spike here that caused level 1 rise, that is market maker driven. Following that, it's been really low volume the entire time. So I would guess based off that probably retail aren't all that extremely bullish just yet. And so even though we have had a move up over the weekend, it's not like a screaming with excitement kind of move up. So when we're on a lower time frame, it does look a little bit better, because we can see that we've had this nice trend. We had the W here, we had the break, the retest held the low of the week perfectly. This was an update that I put out on my Twitter during the week as it was happening to say that we must hold, and we did hold, which was good. And as we held it, we created another W, which has then taken us through to our level 2. So what I'm seeing now is a little bit of a sell-off. I actually think that's okay. This little move that's happening down here on the weekend, that's completely fine, because at the same time as this move happening, it's broken out to break that 4-hour trend line that I showed you earlier, this one right here. So we do have the break. We're in potentially the process of the retest of it. And so that is just price coming back to maybe retest it. It may even line up with the 200 EMA on the 1-hour time frame. But as long as this retest comes back and creates yet another higher low, then I would say that we probably will see our level 3 rise at some point next week. And when I turn to the heat maps, what I can see over here is that we do have some heavy shorts currently at about 85.8 to 85.9, and then a bit higher up at about 87. Now, I know a lot of people, I've seen it over the weekend, a lot of people are saying, it depends on the analyst, but I've seen a lot of levels between 88 and 92 as the levels that analysts are saying they need to see Bitcoin break if they're going to be bullish. So it kind of makes sense that we've got shorts here just under that range, and we've got longs here at 81,100. So if price were to continue to retrace down close to that 81,100, that may act as the retest area, and then we may get our level 3 rise up into these high 86, 87 kind of range. And if that were to happen, we would just have to reassess at that point. And that 81.1 lines up with this vector candle right here. So anywhere around here, say again, like I said earlier, around the 1-hour 200 EMA, a spike into there, as long as we held that zone, I would expect that we will get our level 3 rise next. That may not come down that low, but that would be the lowest before I would invalidate and say that we're not actually going to get a third level. Now, if we are going to get our third level rise, we want some good news to happen this week, because it's going to likely come out of a news event. So we've got a lighter calendar this week, but it's still packed with some landmines that we should go through. Let's take a quick look at the key news events that could drive volatility this week. Monday kicks off with member Waller speaking at 1 p.m. New York time. That could set the tone early in the week if there's any surprise commentary around rates or liquidity. On Tuesday, it's tax day in the US, April 15th. Historically, we often see the stock market weekends leading into the 19th as investors liquidate stocks, or money market funds to pay tax bills. It's subtle, but it matters, especially in low volume conditions. But Wednesday is the big one. On Wednesday, we've got Fed Chair Powell speaking at 1:30 New York. It's the most anticipated news event of the week after last week's bond market turbulence and Trump's pivot on tariffs. Markets will be looking for clarity on the Fed's direction. We also get US retail sales. This will be right at the end of the UK session, which could spike volatility. The big question is going to be, will it come in negative like inflation, or did people front run spending ahead of the tariffs? And also the VIX options expire on Wednesday, so volatility could get kind of weird. And then on Thursday, we've got the trifecta. We've got the ECB rate decision. The markets expect a 25 basis points cut combined with recent tariff chatter and softening European yields. That could shake up the euro pairs and global risk sentiment. US unemployment claims stay in the Goldilocks range, the 200 to 240K, but they're still worth tracking weekly. And we get the Philly Fed manufacturing index, which is expected to come in negative, another soft economic data point to watch. And remember that US and European markets are closed Friday for the Good Friday holiday ahead of Easter. That means stock options expire Thursday, and with a shortened week, we may see volatility concentrated around midweek. And on top of all of that, earnings season picks up steam. Keep an eye on forward guidance and what companies are saying about tariffs and macro headwinds. That could tell us a lot about how institutional money might shift in Q2. And the most important thing that you can do this week, in the description of this video, you will find a link to my X profile. Make sure you grab it from there and don't just go and search me on X, because there are a lot of scammers and imitation accounts out there, but go and find the real one down below and make sure to give me a follow over there, because I am going away this week and I'm not sure how often I will be able to do videos on YouTube, but I will do updates on Twitter, where I can just do quick written updates if there's anything that I think you should know. So stay alert, stay strategic, and if you want help navigating with a pro system and supportive crew, check out the link below and come join us at Trade Travel Chill.